My name is Andres Ochoa. I'm here with Juan Moreira. I'm a financier and Juan is a real estate agent. And we'd like to share our experience and what we believe the market is looking for a consumer either buying an investment property or a home for themselves. Thank you so much, Juan, for joining me today.
Absolutely. Thank you, Andres.
I'd like to start off by talking about one another and what we do and our experience and what our goals are for the upcoming years. So, Juan, if you could please just give us a nice introduction of who you are and your experience in the real estate.
Yeah, absolutely. So I actually did grow up here in South Florida. I've been a licensed real estate agent for about 4 years now. We've closed deals in and out of state. Very familiar with commercial and residential real estate contracts as well. And personally, some goals of mine is just to continue growing, have great partnerships like we have, and continue growing and helping our community.
Absolutely, Juan. Juan and I have been working for quite a few years, and all I could say is he's a very committed agent to his customers, because at the end of the day, customer support is very important in our industry.
Correct. Number one.
Exactly, number one. Myself, I've been in the finance industry for about 6 years. I started right out of college. I was interning for my university, and they helped me get set up with a good brokerage. And from there, it's just kind of build my way up. The best thing I could say is it all comes down to experience. You could have a degree, a diploma that gets you that knowledge you need, but to really dive into this industry, you have to just get in it case by case, understand clienteles, understand different programs. And as a financier, when I understand what programs I could offer, it helps my real estate agents
Tremendously.
and that gets you more deals closed, because the more you understand that end, the more you can help your clients. Every client will have a specific and different scenario from everybody else. Some of them might be similar. There's a lot of W-2s, salary jobs that are pretty straightforward. I like to call them cookie cutter deals because they're straightforward. But then there's also self-employed people that like to be their own boss. Taxes get a little bit tricky. So having a good team on your side will essentially lead to your success when it comes to real estate and buying a home, okay? Let's talk about the process, Juan, okay?
Yes.
I want you to explain on your end, on the real estate side, when a client reaches out to you, when they want to work with you, whether it's as a listing agent or as a buying agent, what happens there, and when you do that transition to send them to a financier, okay?
Right. Yes. No, great question. I mean, people often wonder how it is we go about our business.
Mm-hmm.
What are the intricate details within what we do. So it all begins with a conversation, understanding the needs of your customers, of your clients, of people interested in the real estate market, right? What they're looking for exactly, and their financing needs, right? So it's a very open conversation that we must have. Clear lines of communications and transparency is of utmost importance, really. So I understand from like your end, from a financing standpoint, right?
Mm-hmm.
We have to see what, like you were mentioning before, W-2 employees, salaried employees, right, versus self-employed folks, and the differences between what you're looking for in their finances, right? How are you
exactly
going to qualify that?
Because it all depends on that end of what program we could use to qualify, right?
Yes.
So essentially, if you have a client, Juan, that comes to you and they're not buying cash, because there's a difference, right?
Yeah.
There's a difference from when somebody's coming with a lump sum of money saying, hey, I'd like to buy this house for $400,000 and I have the $400,000 in my bank account.
Right.
So you yourself would go to the listing agent, or if it's sold by owner sometimes, and say, look, I have this client, they want to go cash, can we go under contract? Essentially there, it's a much smoother transaction, okay, right? You would say. But not everybody is able to have that type of liquidity in cash, right? A majority of people will use financing to try to leverage their money so that they, don't spend it all on one asset. Even though some may have that type of money, not everybody does, right? So I think what Juan was trying to get to at that point was once he speaks to a client and they decide they need financing, they're gonna head over to me so that I could do my analysis and go through what's called a pre-approval, right, Juan?
Yes, correct.
So that pre-approval will tell Juan what the client's budget is and how their financing looks in a way. Sometimes realtors don't like to know too much in the nitty-gritty, but I like to, educate them. I like to tell them, look, this is where your client's financing is standing at, what their budget is, and what you could go look for. Because, you know more than I do, because I like to sit behind a desk. I like to do the back work with the numbers and everything. But I know, Juan, your time is very valuable when it comes to going out, looking for homes, driving in your car.
Right.
And then sometimes people come to you. I've seen it with different realtors, not just yourself. And they come with this idea.
Yes.
Right?
Yeah.
Thinking, I want to buy this. I love this home. Let's go look at it.
Yeah.
And then you put your time and effort looking for a home, and it comes out that they can't even afford it. Right?
Yeah,
Has that happened to you, Juan, at all? Or
Yes, or ideas change, like you mentioned. And it's just about preparation. You have to have your numbers in mind, and that's where having a great financing partner like Andres is very much necessary. So no, I completely agree with you. That's your blueprint.
That's
your blueprint. And
That
for
exactly
every
is the
single
blueprint.
property that you're interested in, you have to run the numbers first, see the scenarios. In the market that we're in right now,
yes,
being more negotiable as well for buyers, we can see, okay, maybe there's a seller credit that we can negotiate on their behalf, which ultimately can benefit both the seller and the buyer, making sure the numbers work. And that's why reviewing first before going out, getting very ecstatic about a particular home that could or could not work out,
right,
is best to just review the numbers. And it doesn't take too long, right?
No, it really doesn't. I would say a pre-approval if the client themselves, because you have to really be realistic, okay? Some clients are prepared, some clients are not. Some clients have their documents ready to be sent, and some of them need to gather their finances and get organized, right? So if you have somebody that, we'll give a few scenarios. If you have somebody that is a W-2, they're going to be pretty straightforward. They have a specific salary, specific amount of hours they work, overtime if they're allowed it, right?
Right.
So it's very straightforward. And those deals, you could get a pre-approval even that same day or in the next 24 hours, okay? And with that, it's easier for you because I could say, hey, Juan, look, your pre-approval is for $600,000. Let's say your client is approved for $600,000. So now you could go ahead and actually schedule and go look for homes and know that, look, I'm not wasting my time as a realtor because these clients are serious. These homes could go under contract. They fit their budget and you have a potential of getting a deal. You know what I mean?
Exactly. Right.
So that's the whole point of it, right? So let's go into, once we have a pre-approval, right? I myself will look at the client's financials and all the nitty-gritty, make sure we're good to go.
Yes.
You go look at a home, right? And once you're looking at homes, on my end of it, I will make sure the client knows their interest rate, their monthly payment with the combination of principal, interest, insurance, taxes, and HOA, depending if you have a community that offers amenities like a pool and tennis courts and things like that, etc. Right?
Right.
So once the client understands those homes, and what I like to do is my realtors, just like Juan, they will send the client a few of them, like 4 of them, let's say 4 homes. They look at them. I help analyze to make sure they understand what each home has in it, pertaining to that monthly payment, right? And then once you go look at them, Juan, what do you essentially tell your clients when you look at these homes?
Right.
What do you advise them?
Yes, so great question. So once you're already aware that you're pre-approved for that particular home, without having first an inspection, ties into more of the details as far as monthly payments goes. With insurance, that's also something people got to keep in mind. You're going to have your home insured.
You are.
When you're financing, yes. So walkthroughs, great things to really keep in mind. The conditions of the home, is it deteriorating anywhere? Maybe the roof, take a look at the roof, maybe see if there's any fascia that's falling off, discoloration anywhere outside and inside the home. The windows, are there hurricane protection, storm protection around the home, the doors, the windows, the garage door as well, don't forget if there is a garage.
So essentially you're talking about just the first walkthrough, just seeing what the eyes could see.
Correct.
What your eyes could see, okay, there's a hole, there's not a hole. You know what I mean? Like obvious things, right?
Exactly. Test the water, the sinks, everything, make sure there's no leaks anywhere.
Typical things that you would essentially want and make sure things work.
Correct, yeah.
So then from there, let's say we really like this home, right? Your client's ecstatic, they know that they're approved, right, Juan?
Yeah.
So we'll go to trying to get under contract.
Yes.
So take us a little bit more in depth of how you write a contract, what's in the contract.
Yes.
I know there's some aspect in the financing side that I have to look at in the contract, and I'll talk about that on my end of it.
Right.
But what do you do once you're ready to write a contract?
Yes. So, what we like to do is make sure we convene with the borrower, with our lender, and make sure that our offer is of the most benefit to our clients, right? Make sure that their interests are protected. Are they asking for anything back? Timeline wise, what works best for the buyers as far as closing dates,
of course,
inspection periods, how far in each case is going to be different, of course.
Okay.
Priorities are going to vary between clients. So there are a few different details that we need to talk over, make sure everybody's on the same page, present that particular offer to the listing agents representing the sellers, and from there see if they accept our terms, our best terms. If not, see if we can renegotiate, and try to make sure that their dream home is able to be secured with the proper negotiations.
Absolutely. So Juan will negotiate on behalf of the client. I will be there on the financing end of it. And once they do go under contract, typically a contract will be for 30 days. It could be a little bit more, a little bit less. It really just depends on the situation and what we as professionals would advise the client and all the third parties that are associated in the transaction, right? So let's get into the contract, right? We're under contract, great, everyone's happy. The first thing that I see is the inspection, right? So you went over the walkthrough, the initial, just looking at what you could see that's wrong with the home, right? Now you're gonna have an actual professional, right? Come out to the home and take a look at it in a much more in-depth analysis, right? So give us a little rundown on how you do that, or who books what, or how that goes.
So for inspections, of course, and again, the borrowers, the clients can choose whoever. Maybe they know someone that is an inspector, professionally licensed. We try to give at least 3 options. They can vary and see, okay, who's got the best scheduling availability, the best pricing, and who you get along with best, and choose, okay, this particular inspector is able to go at this time, maybe I can meet him there. It's highly suggested that you are present if possible.
Yes.
So you can see as well, ask the inspector any questions as soon as he's looking into the attic, for example, or she is looking into the attic, walking on the roof, any sort of details or curiosities that you may have, you can ask right then and there. What they're going to look into are, again, the big ticket items. Let's check the roof. Roofs nowadays can cost you anywhere between 20 to 40, 50 grand, depending on the style of the roof, how big the property is. AC unit systems as well.
Yes.
Air conditioning. They're going to look into, of course, the flooring, see if there's any cracking, settlement issues inside the home, ceilings. light fixtures, everything's working. The water, the plumbing, water's running fine. There's no leaks. There's a lot that they go into, and it could last you anywhere between an hour or a couple hours, depending on how big the property is.
Absolutely, yes. So that's pretty much the inspection part of it. There's going to be a professional that comes, does an in-depth analysis of the home, and then gives us a report.
Yes.
Essentially, on the financing side of it, what the banks want to see is a 4-point inspection and then also a mitigation inspection. And these reports, when they come back to us, we make sure that it meets the standard for the house to be insured.
Right.
So that's very important to understand. If the house cannot be insured because it's in a bad condition and nobody wants to repair it or doesn't want to do the required steps to make sure it can be insured, the bank will not borrow the money. The bank will not lend the money to the borrower, right?
Right.
Because it's a risk to the investor, to the bank if it can't get insured. Right?
Correct.
Typically in the contract, Juan will put an inspection period, okay? So this inspection period could be between 4 to 10 days. It really depends on what you negotiate, but typically it's about, what do you think, Juan, like 6 days?
Right. On the FAR bar as is residential contracts that are created by Florida real estate personnel and obviously the Florida bar. There is up to 15 days stated there, right? I mean, you can negotiate that. If you need an extension, you can ask for an extension. And then the sellers obviously have to either accept or deny that, right, or counter. But yeah, I mean, typically you'll see more about around 7 days.
7 days. That's what I typically see as well.
Yeah.
And in these 7 days or so is when the client is able to analyze the inspection.
Yes.
And then if they decide that the house is not up to par, that they do not want to buy this home because the seller doesn't want to cooperate on the repairs, or it just seems to be too much of an expense to repair the house and make it to the way they want it, then that essentially gets them a way out of the contract, right?
Right.
So if you're on the 5th day and you have a 7-day inspection period and you're on the 5th day and you decide, this house ain't for me, well, you could legally get out and you get your deposit back. Is that correct?
Correct. Yes. And that's for deposit. If you have made a deposit, good faith earnest money deposit, escrow deposit as they call it.
Yes.
With a title company, could be an attorney's, whoever is holding escrow, the escrow agent.
Right.
Whatever amount you have, there's no set, mandated amount that you need. 3%, 10%, 20%. You can negotiate that with the sellers as well.
Okay.
See what is comfortable for everyone to accept. And then yes, of course, you have your full right to receive that back without any legal implications to you.
Fantastic. So let's move forward with the contract. Let's try to get it as clear as possible in a brief time that we're here, right? So we have the inspection. If all goes well, we continue with the contract. Next comes on the financing side, what's called the financing contingency.
Yes.
And this contingency essentially gives us a period for the borrower to be fully approved, okay? So there's a difference between a pre-approval and a fully committed approval with the bank. The pre-approval essentially is what allows me to really understand that if the client is financially stable, if the client shows sufficient credit worthiness, that he can even be allowed to get a loan. I run what's called desktop underwriting, also known as DU, to make sure that they become approved eligible, okay? So I do that on my behalf, and once we go under contract, that's when I start negotiating with my lenders so that I can find the best possible terms as a broker to give to my clients, okay?
Exactly.
In that financing contingency, if the period, for example, is 20 days, and let's say we're on the 15th day, and the client was not advised or ill-advised, which I highly doubt it because I always advise my client very well, But let's say they randomly decide to buy a new car, or they decide to take a big expense out. Well, that could really mess up the financing for their home one.
Yes.
Because I have to calculate what's essentially called the DTI, the debt to income ratio.
Yes.
That is the income that you make monthly, and then the liabilities you have monthly. And then we have to bring in a new liability, which is a mortgage. And all of that has to fit in a certain percentage with the banks so that they can see what free money, what availability you have with your income and your debt to qualify for a loan. That's what kind of gives us that budget that we're looking for and what they can afford and cannot afford, right?
Right.
So you could get out of the contract with the financing contingency if you are denied. So if that were to happen and, hey, we can't finance you anymore because you decided to buy something while you're buying a home or something like that, right?
Mm-hmm.
I could deny it. And if we're in that period in the financing contingency, let's say it's 20 days, on the 15th day, we figured out, hey, why'd you buy this, whatever it may be, I could deny you and you could cancel and essentially get your money back.
Correct. Yeah, as they call it, the loan approval period, right?
The loan approval period.
Yeah, you don't earn the loan approval. You just communicate that to all parties. Hey, we weren't able to earn the loan approval here. And that's fine. There's no need for a denial letter. We don't need to get into the specifics for the seller's sake, because that can also lead to some legal implications. Now they have a right, like maybe somewhere down the line, you didn't turn in the paperwork on time, or so just literally just email, hey, no loan approval. The loan approval was not possible to be earned here, and we have to cancel.
Right.
You get your earnest money back.
Right. So those are two important clauses in the contract.
Yes.
As well as the appraisal. You're gonna have an appraisal period, right, Juan? An appraisal is to make sure that what you're buying in the market is at a good price. You don't want to be buying something over than what the market is saying it costs.
Right.
You really want to buy something that is a bit lower than what the market says. Hopefully enter this deal with some equity in your home, okay? So that's a pretty good little breakdown, Juan, I would say, of pretty important aspects of the contract.
Right.
Right. So I want to talk about the market now.
Yes.
Okay. So let's talk about how it's looking in the next couple months. Let's talk about how it's looking right now. I'm going to just start off by saying that rates have gone up in the last couple years.
Correct. Yeah.
It's obvious, everybody sees it, as well as inflation.
Yes.
People can recognize that things are becoming more expensive, that what we were able to do before ain't what we could do now because the rates are higher, groceries, certain aspects, and that just involves the economy in itself.
Right.
Lot?
Yes.
Right?
Yeah.
It's a lot
That's
to
true.
think about.
Right. That's true.
It's a lot to have.
Exactly.
So you have to have somebody in your team that understands the market so that you're there at the right moment, right? So what do you think about the market today? What do you see?
Well, it's again going back to what you were mentioning of the rates have doubled, tripled in certain cases. From the low 2% that we were seeing the early pandemic stages.
And we'll talk about that too.
Exactly. And to now, and of course that can seem a little scary now comparing, but again, this is probably the average where we're at right here sitting around the 7%. So that's probably the average throughout the history of real
It has
mortgages.
been 6%, 7%. You're right.
Exactly.
Right.
So, truly, and there's programs to and tactics to help lower that interest rate down, right? It's not just about the rate. You what do they say? You date the rate, you marry the home, right? So eventually you'll be able to refinance, which is you'll deal with this gentleman right here. Basically, when you've earned some more equity in the home, you've lived there for a few years, you'll be able to either cash out, pull some money out from the equity, or refinance to a lower rate if the rates have come lower. So
That's a great point.
there's a lot of different strategies. It doesn't have to seem so scary and daunting. It's a figure, it's a number, but we can make the numbers work.
Exactly, and that's what most important is, understanding the numbers, so that you know what you're getting into. Juan
Yes.
touched to a couple good points you touched on was interest rates, right? So yes, the rates are significantly high. They have actually been a little bit lower in the summer. Now that we're getting into summer,
Yeah.
they're starting to get a little lower. I've
Mhm.
seen the feds come together and talk. Last week, I know that there's been a lot of consumer reports that are coming out,
Yes.
saying that some companies are doing pretty well, and so that all ties together with the interest rates, because
Right.
if inflation is at a certain point, then rates are going to be at a certain point, and usually they correlate with one another. So if inflation's going up, rates might be following it as well, right?
Yeah.
And if inflation goes down, there's a chance that rates might go down as well, depending on what the federal government, believes that they could do. And that all has to do with the unemployment rate, the employment rate, right? Whether how many people are employed, how many aren't, okay?
Yeah, right.
How many people are producing, whether jobs are being formed in the US or they're outsourcing it to different
Right.
places around the world.
Correct.
The economy and who runs it is quite important when it comes to us as a people. So I like to get a little political in this, not too political, because I know some people out there, they can't take the political talk.
Right.
But
Yeah.
we'll be honest with it. In the last 4 years, it hasn't been very pretty. I'll be honest with you. My groceries have gone up. My gas has gone up. Interest rates have gone up. It hasn't been something that people benefit from, right, Juan?
Yeah, no, I completely agree with you. I mean, unfortunately, a lot of unforeseen, situations have gone in the whole world economy these last few years. And, I mean, I think, to be honest with you, there's always, each economic climate is going to present opportunities.
It will as well.
Right. So as long as we're working towards a solution, then I
That's
think
something that could help.
exactly.
Absolutely.
Exactly.
And I think we are. I mean, look, I'd like to think that at some point there is going to be a break again in the market. That there is going to be a little bit of a come down, at least to motivate people to buy homes, right?
Mm-hmm.
Because we have to think about it in a way of what the consumer mind is thinking, right, Juan?
Right.
So if you are looking at a few years back when the pandemic went down and the rates went to the lowest they have gone in history, right? In quite some time. People are getting 2%, 1%, 3%, you know what I mean?
Yeah.
A lot of those people are holding on to those rates.
Yeah.
They don't want to sell. They want to hold on because they know that those rates might not come back ever again. You never know. I mean, it could, it may not.
Right.
That's part of like the wonder and making sure you stay on top of the market, right?
Correct.
However, even though that had happened and people benefited from it, doesn't mean that, okay, now people aren't going to buy any more homes.
Right.
It really just depends on
timing.
the timing, the necessity.
Right.
If somebody really needs to buy a home because, let's say, the rent is almost the same amount they're paying for a mortgage, well, then you have to outweigh those things. Those are some of the market aspects. That rent now for a one bedroom, it's like $2,000.
Yeah. In certain markets.
Certain aspect, $2,000.
Yeah.
Just for a one bedroom apartment. That's a mortgage. That's a house in a few years back.
Exactly. Yeah, no, 100% to your point. I mean, it just goes to show how micro it can be in real estate in general. A lot of the local Floridians, as they call it, are being pushed out because it's some migration patterns that are coming here. So there's a lot more interest, a lot more businesses, a lot more employment coming here. And with all that commerce, it increases again the prices of cost of living, gas prices, groceries, you name it.
But there will be, I want people out there to really take this conversation that we're having today to not think that it will never happen for you, that you're never going to be able, you will be able to own a home.
Right.
You will be able to get there because you're going to work your way there.
Yes.
And you have to have a game plan. You can't just, self-meditate or self-proclaim that I'm going to be a homeowner eventually or at some point.
Right.
You have to plan for those things, Juan.
Yes.
You have to commit, you have to set up a team, you have to talk to your professionals in the real estate and the finance industry to give you a game plan so that maybe right now it's not a good time, maybe because you're not financially stable or you have too much debt, but later on it could be the chance for you to buy and commit to something, right?
Right.
It's never too late. It's never too late.
And it's never too early to form that game plan.
Exactly. It's never too late or too early to form a game plan and to buy a home.
Correct. Yeah.
Absolutely.
I agree.
And we'll get to that once you are ready to come to us, because we have to essentially have you reach out to us, right? Because there's only so much that me and Juan can do. I talk to a lot of people. Juan talks to a lot of people. But if you're not mentally ready to have that conversation, then you have to prepare for that.
Yeah.
Even if it doesn't seem pretty, even if you get discouraged, it doesn't matter.
Yeah.
See where you're standing and start walking in the right direction.
No, correct. Yeah, that's the silver lining in all this,
Right?
right? Like with a great team behind you or beside you, we're gonna help you in every way possible. So it's always great to work with exceptional professionals like Andres and his team, and it really helps you feel safe. That's the thing about it.
Absolutely.
You want to trust who you're working with because it's, for a lot of people, the biggest decision, the biggest investment of their lives. So we take our jobs very seriously, and we make sure that our clients are well taken care of and happy and successful in their transactions.
Absolutely. I mean, just between Juan and I, 6 years of experience, another 4 years. We're almost a decade, almost 10 years. A decade of just experience in the market.
Yeah.
And for us, that's quite a bit of experience, because we've been able to really understand the market in its downs and its ups. And that's what you need to understand, because even though in some aspects of the economy, when devastation happens, when there's wars or pandemics or economic, downfall, when the market goes down, right?
Right, yeah.
In there's opportunities for the people that prepare.
Correct. Yes.
The people that prepare for these type of events and take advantage of it. Like in 2008, the market and everything went down.
Right.
There was homes that were going for $70,000 and now are worth like $400,000.
Yeah.
It was one of those times where if you understood the market, you could have benefited tremendously from it.
Yeah, that's true. And have the courage.
And have the courage to do it.
There's a lot of folks are scared in these days. A lot of jobs being lost.
Yep.
A lot of uncertainty. Just like, you can argue that there always is, right? But different levels to it. Yes.
It's all about planning, right?
Yes.
Say planning and just being there in front of everybody. Yeah. Absolutely.
Yeah.
So, Juan, I just want to have a little bit more insight on your wisdom. I want you to tell us from your experience, okay, what are the best points that you would say for a home buyer to know? Like give me like 3 or 4 just points that you say, look, this is the most important thing you need to think about.
Yes, right.
When looking for real estate or reaching out, you know what I mean?
No, great question. I would say preparation. You gotta prepare. It's about the plan. It's the game plan that you form with your team, within yourself, with your family, your partners, whatever your situation is. You gotta prepare well, right? Patience is key here, because you gotta wait for the right deal. The numbers gotta make sense to you.
Yep.
It's not just gonna fall. I know this day and age we want things quickly and things to happen fast, but unfortunately, what the market presents to you, that's the opportunity right then and there. You see if it works for you see if it doesn't, and you make a decision through there. So preparation, patience, And I honestly, I'd say again, it's the team. It's the team. It's the due diligence that you and your team do.
Mm-hmm.
The professionalism and the tools that a great team can bring to the table. You know, I mean, I've seen wonders happen. You know, with
Yes,
prime equity,
yes.
I'm telling you, it goes above and beyond.
Thank
So you got
Thank you.
exactly. So those I would say are very great points to just keep in mind.
The team, of course,
Yeah.
and I'm going to tell you my wisdom, my advice, my 4 points. I mean, you covered most of them because at the end of the day, Juan and I, we work hand in hand.
Yes.
Like, we have to have one of another to be able to close these deals. And I know some people are real estate and mortgage professionals at the same time.
Yeah.
But it's a very time-consuming thing. So
Yes.
if you have a team together, for example, my biggest stream of leads come from realtors that are constantly pushing themselves to get leads, to be in the right areas to get customers, you know, reaching
Right,
out to
right.
people, right? So,
Yes.
yes, I would say team is the number one thing, right?
Yes.
Communication is the second.
Yes.
I would also say
Very
being
much.
realistic,
Yeah.
right? Because some people like to live in Looney Tune fairy tale, you know, they come to me, oh, I want this and I want to live in this and then I'm like, okay,
Right.
great, but you only make this amount. Like, you need to make more to
Yeah.
fulfill your fairy tale dream. And I'm very nice about it. I'm not out here, you know, shaming people like, hey, you
Breaking
can't, I'm not
hearts,
breaking
yeah.
too hard on hearts, you know.
Yeah.
But I like to be direct with people. I like to know,
Yeah.
you know, that people appreciate my honesty, my directness, because
Mhm.
with that comes the whole game plan,
Yeah.
right?
Exactly.
So,
I agree.
I mean, I think this has been a fantastic conversation, Juan.
Yeah.
Okay, I think we covered a couple good points. We're gonna continue to do more videos, try to do shorter segments, but this is one that we just wanted to share with you all, let you guys know what me and Juan are doing, our plans. We're teaming up and doing a lot more social media, more marketing. We're closing more deals because of it. So we want to involve as much of an audience as we can, because we know that the people watching, they want to become homeowners.
Yes.
You don't want to rent for the rest of your life. You don't. You want to become homeowners. You want to be able to own something that's yours, build equity on it, pass it down to your family,
Yes.
become a generational wealth type of thing, because that's where wealth really comes from real estate.
Correct.
One of the main things is real estate, right?
Yes. Yes.
So
Agreed.
it was a pleasure, Juan. Absolutely.
Yes,
Thank you for
always.
being here.
Thank you.
Thanks for just providing your wisdom to
Thank
to
you.
our viewers. Thank you.
Absolutely.
And we will be more in touch with everybody out there. But thanks again for watching. My name is Andres Ochoa. I also go as Ochoa Financial. This is Juan Moreira. Just tell us about your Instagram. What are your tags?
Invest with Juan. We'll link it all in the description below.
Mm-hmm.
And thank you, everyone, again, for joining us.
Thank you so much, guys. Have a good one.